Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, I did finish the week with, 20 wins and 4 losses for a win rate of 83.33%. Slightly below my 85% weekly goal, but I'm not going to complain. It was a good week. A lot of morning fake outs. The first half an hour have been brutal. The last, I don't know, three weeks, it's just it's been really brutal in the morning for fake outs, double fake outs. It's just most of my losses for the last 3 weeks have been those morning first 30-minute fake outs. So I've kind of been leaning towards more of waiting out the first half an hour, maybe even hour because of that, but we'll go over that more as we go through the days in the recap. But anyways, with that said, trade ideas on, let's see, Monday, which is the 13th. Let's pull Friday and Monday up. Change this to the hourly, even though I don't really look at it sometimes when I do the recap, but I have it up anyways just in case. Now this is Friday, gapped up Sunday, then it pushed more into Monday morning, then it just dumped right here. I think that was the Silicon Valley Bank thing, if I remember. I don't remember if that's particular the reason why it dropped right there. Let's see. Traded is, what would I say, 381 puts, SPY puts into 381, which is rate 381. Oh, way down here. Yeah, it popped up some. For some reason I was looking right here. Popped up, dropped more. Nice little like bear flag right here. See it right there. Then it broke it right here. But that was pre-market. Dumped more, so I said, 381. I kind of rounded up just a little bit because it popped. I would probably set it right when it was right around the 383 level. And I probably should have known better that this was going to happen, because the first trade I took was 37.50 puts at 570 at 9:35 a.m. right when it came back down on any 381. That's when I took the puts. I should have known. I mean, 99% of the time when you have a massive dump, which actually $13 dump right there, that when we have massive dumps like this going into open, that they're going to pop it open to squeeze everybody out. Because first of all, everybody's going to jump into puts and they're going to squeeze them out, and sometimes we just have a dead cat bounce right at the open before going lower. So either or, it should have been a bounce. I should have been looking for that. I should have never even taken puts. I shouldn't have even been looking at them. That was mistake number one to start out the week. I should have known better. It is what it is. I mean, trading, you're not gonna be perfect all the time. You're gonna make mistakes. You're just gonna misread things. That's part of trading. It's all about perception. So that was my first loss right there. I ended up averaging down, making my see, because I got them at 570 and I averaged down at 235. Thinking rate when it popped up more, we were gonna drop more. I don't really understand why I even averaged down. I should have just dumped it. But average down, made a new average at 320, then I ended up dumping at 130. So it is what it is. First mistake number one for the week. I just kind of looking back at it now, I should have never even looked at puts. But sometimes you just think that the banking industry or the collapse that was happening, that it could have been a huge domino effect that could lead to bigger events happening down the road. So it is what it is. Let's see, then the next play was took calls at 1036, which was rate 1036 right here. It dropped down, bounced off VWAP, came up over this wick right here, This is where I took calls right when it bounced over it. I took the 3,900 calls at 850, and then went from 850 to 1690 in that push right there. So got a nice little play out of that. Then took, let's see, puts at 1224, which is right here. It looks like I nailed this one pretty good. You get the breakout right here, and then it faked it, then it kind of like ended up doing a fake out, pull back harshly. That was a harsh candle right there. Then it popped up, it did a false breakout right there, and then when it did a false breakout right here again for the second time, because your first time was right here, then it came back and it broke out again the second time. Because what usually ends up happening when they do a first breakout, people will jump into puts right away. And the way the market's been lately, the market's been so trappy that the market makers are realizing this. They're realizing, okay, we did a fake breakout right here. Everyone's going to jump into puts. So let's ramp it up to new higher day again, take out their stops before we end up dropping it. And that's exactly what ended up happening right here. I know it's more psychological than it is anything. That's just, you got to think like a market maker. You got to think like, how would they do this? If everyone's piling into puts, they would stop them out one more time. That's why in the room, sometimes you'll see after the market's been down, it pops a little more. Then I say, okay, I want to see one more flush because people are going to get onto the other side of it right then and there, thinking a bounce was going to happen or a drop's going to happen. They're going to jump sides prematurely, and then you end up seeing a new higher day or a new lower day to take out stops before they change direction, because they know that everyone's doing that. They can see the order flow, they can see what the orders going through and what people are doing, and that's when they end up taking people's money and robbing them blind, basically. So, but when it came back down here, I took puts right here at 1224, which is this candle right here, right when it got below 387.70. I took the 38.50 puts at 770, and they went from 770 to $10 right there. And then let's see, I took puts again at 239, which is right 239 right here. Came up to the 200 EMA, and I took puts right in here. I think I took puts right down in here, right underneath the 387.75 area. I took the 38.80 puts at 870, and they ended up dropping a little bit right there. Not much. I think it went from 870 to 1030. Yeah, they didn't move that much. So then I ended up taking puts at 350. Actually, yeah, I can see right here, right? It's probably where they dropped before they went back up right there. Then it dropped, came back up, and I took puts right here, right when it broke through VWAP at 386. Yeah, I took it right here, right at 350, the last 10 minutes, right when it broke below the 386 level. That's where I took the 38.65 puts at 770, and they went from 770 to 1120 right there. So that ended up being a good play. This kind of still irks me that I did that, but I took a loss at the beginning of the day. I definitely could have avoided, but it is what it is. I'm not gonna lose sleep over it. Just move on. Just one of those things you just look at and you're like, I should have known better. And it's almost every loss, or not every single one, but most of the losses have been basically the first play of the day. I don't know why that is. It's just so annoying that it's been happening like that. But I took another loss on Tuesday in opening in the first half an hour. I traded Israel on Tuesday as it calls over 391. Right here, the high day there here was like 390 50-ish. I rounded up. It popped up. Then when it came up to the 390, close to the 392, I think the RCT trend line was right there. I was up a little higher, but when it came up there and it rejected, I didn't touch it right here. I could have gone calls and gone more continuation, but it's just the market's been crazy. But when it did a tail candle right here and it came back down and got underneath this 390.50 area, I grabbed puts. I grabbed the 38.90 puts at 10.50. Didn't grab that much. I've been playing the morning small because of knowing that they're having a lot of fake outs and stuff. So if you know that things are happening or things are more high risk, you just got to take smaller positions and anticipate that. You play heavier when you feel more confident and when things are working correctly. And sometimes it's not always a pattern. Sometimes it's a time of day, part of the day. Lately, the afternoon has been the best parts of the day. So the last few weeks or a couple weeks, 11 to 3 has been like the best. The worst has been the first 30 minutes to an hour and the last half an hour. So make mental notes of what time frames work and what they don't. They always change. Patterns change. Tricks and traps change. The market is always evolving, and you're going to make mental notes of all these changes and just change with it or just get crushed. So you got to deal with that. So because it did a top candle right here and it came below the 39.50 area, I grabbed puts to 10.50 like I said. Then I ended up averaging more down, I think up here or over here, I'm not quite sure. 10.24. Oh, I think I did it right here at the RCT trend line. I added more at 5 and make my new average 610. Then it popped more right here, and I stopped out, and they ended up working out. But it is what it is. That was kind of annoying that we had that drop right there, and it ended up working out really well. So, oh well, it is what it is. I'm not going to complain. Now I took puts at what, 11.10. Now 11.01, which is right here. I took puts right here. 11.01 right down in. I probably took them closer to down here because I had it here, averaged down here. Then it popped, stopped out, got closer to at the money. Got the 39.10 puts at 7.30, and it popped a little bit. Then it ended up dropping right here. So. They went from what, 7.30 to 10, so they ended up working out. Then I took puts at 11.18. Not 11.8, 1.18. Let's get the time mixed up. Right here in this candle, I remember doing this. You can see the wicks right here. This was news. This could have been more about the banking news. There's been so much banking news throughout the week that when we had this drop, I didn't want to chase it, and we had this massive candle, and it retraced like 50% of the way up. And when it did, I ended up grabbing the puts in the retracement. I do play these a lot, especially on news, exaggerated moves like this, because they end up, when you have these deep red candles, they do end up retracing like 50% of the way up before going a little lower. And I do like to grab those, so I did grab it. I grabbed the, let's see, the 38.90 puts at 9.20. I got it closer right up to the 3.90 area. And as you can see on the wick right here in the second candle right here, the wick came all the way back down close to lower day again. So me buying it up here and coming down and dropping it down here ended up working out really, really well. I love these retracement plays because they got it at 9.20 and they went from 9.20 to 15.20, so they went like $6 right there. So I take those retracement moves every time. I do like them. Then I took puts again at 143, which is right here. I got the retracement move right here, came back up, rejected the 37 EMA. I don't really pay attention to the 37 EMA. I just have it on the chart. I used to respect it at one point in time. It doesn't anymore, but I'm so used to seeing it, I just keep it there. So when I rejected that and came back down here, I grabbed it right when it got, let's see, 143. Yeah, I grabbed it right when it got underneath the bodies of these candles of 389.35. I grabbed the 38.90 puts again at $9. The same puts at $9 this time. As you can see, I got it before. It was at 9.20, so it was probably closer to up here. Now that theta worked, I had to get it right here. But anyway, so I got it at $9 right here, and they went from $9 to $17.80. So almost another 100% play right there on these news events. Then I took puts at 308, which is right here. pop back up. Pretty much the same thing. You pop back up. This time it rejected the 20 EMA, which is the light blue line, and came back down when it broke below the 388.50 area. That's where I grabbed puts. I grabbed the 38.90 puts at 8.70 this time, and they went from 8.70 to $19 right there. So I probably got it closer up here. Yeah, if I got it at 8.90, I got it closer up here at the 389 area than down here. Probably got it closer up here. But anyways, that is what, Tuesday. So that ended up being a pretty good day, except the morning loss. I was probably thinking that because we had this tail candle right here and we were going rushed, we were kind of going back down the lower day. Well, lower day is down here, but underneath this body of this candle, that I thought maybe we were going to drop, and I kind of jumped into it too soon and probably should have waited, but I could have probably avoided that. But I had the right idea. I just got in too early, and if it didn't break lower day, I probably would have never taken it. So I probably shouldn't have done that. So that's two mistakes I made that I shouldn't have. This is why I do the recaps. It helps me just as much as it helps you, because I like to hit it and quit it. I don't dwell on it. I just move on, just take my game plan, then just move on to the next play. I don't like to sit back and just look. But when I do the recaps, it just does help me think, okay, why did I take this, and remember not to do that. So sometimes even though I say not to do it, I still probably end up doing it eventually at some point. So you get into the moment, and sometimes you just don't think clearly. So now Wednesday, that was some nasty push end of day. I kind of wished I got that, but oh well, it is what it is. Now on Wednesday, let's see, the 15th, Trader Days room, SPY calls over 386, which is right here, the wick of these candles. It dropped down, came back up. Got the first 10-minute candle right there. As soon as it broke higher day on the second 10-minute candle, I used to love playing the ORB. Actually, I still do, but just lately it's been fake outs. So I grabbed the 386 calls. Right here, I was up too, and I didn't sell it. This is one I held, I think, the entire day until right here. Yeah, this was the one I held because I had SPY calls at 386, calls at 295. I had it right here, and I could have sold it for, I think it went to as high as like 330, 340 maybe. No, it didn't quite get to yeah, I think it got to 340. Because I remember I was trying to get a sell order for 350, and it never triggered. So then it dropped down. As you can see, it did a fake out. Then it came back down the lower day. It did a fake drop, and it did a fake pop again. Then it dropped. I mean, this is what I'm talking about. This is like the first hour right here. Fake breakout, fake drop, fake breakout, fake drop. Then it drops more. It's really, really crazy. And I sat out for most of the day. Then I took puts at 141, which is right here. No, 141 right here. Pushed through VWAP, pull back, pushed through VWAP, came back down. Right when it came back down to VWAP, pushing right through it. I grabbed the 3840 puts at 141 right here. I got them at 740, and and then I ended up averaging down at 157. Oh yeah, I remember this. Yeah, I grabbed puts right here. It dropped a little bit. I didn't take it. I think I got too greedy. Then when it came back up to here to the 387 area, I ended up averaging down at 360, making my new average at 440, with the idea that it's going to stay within the range because it's been in a tight range. Then it ended up dropping right here, and then I was able to get out, and I had my new average was 440, and they went to $6. So as soon as it turned green, I got out. Then when it came back up and broke the 387, I jumped in. I jumped in 38.75 calls at 219. Yeah, right here, right when it broke the 387 area. I got them at 760, and it popped. When it broke 387, it just popped violently. And they went from, 760 to 25.20. So they went 200% in that push right there. I'm not quite sure what that was. I think that was something about maybe the banks getting getting bailed out or rumored they were getting bailed out. I don't remember. There's so much that happened this week. I can't remember the timeline, but there was a violent pop right here on something new, something about the banks, maybe getting bought or something. I don't remember. But the SPX calls was from 760 to 25. 200% move right there. Then when this popped, my 386 calls I had in the morning, they popped too, and I ended up dumping them for a nice solid green play. And then this was end of the day action. I was trying to get, let's see, wait a minute here, 219. Yeah, got that call. I played calls again. I'm getting ahead of myself at 253 right here. Right here. Yeah, it wicked up, came back down. When it pulled back, I bought the dip. I bought the 3890 calls at 830. I bought the dip right here and it popped. So yeah, I got them at 830 and they went from 830 to 1190. So I'm thinking I probably bought them either over 388.50 right here, which probably makes more sense because you get that push right there than I would probably down here. I think I probably bought them right over this. You can see the body of this candle, body, and when it broke over these two bodies right here, three bodies if you would include that and that over the 200 EMA, that's where I grabbed the calls right there, I'm assuming. So 830 to 1190, yeah, that's probably where I did grab them. Then I grabbed puts at end of the day. I mean, the puts calls at end of the day right at 322, which is right here. Rejected high a day again. I reject, pull back, reject, pull back, and came back quickly. So I was thinking, okay, we were going to get this kind of a move because if you look, it's kind of the same kind of setup. It's sitting in like a channel right here, and then it just pops the last candle. So I got it right here, thinking that we were going to just do this kind of move into close, but it didn't. It pulled back. Then we had this move right here. It was a very, very dirty end of the day action. And ended up taking a loss on it. Didn't have much in it. End of the day plays in the first 30 minutes. I have the least amount because of the sketchiness of the times. So then let's see. Thursday. Let's see. Thursday. SPY puts under 385. Where is 385? Right. When I picked 385, oh, I think I went over here, right over here, this area, previous day, 385. Got the first 10-minute candle right there. You get the fake out. It started to drop, then it popped up, then it faked out again, then dropped, and then it pushed. I took puts at 10:06 right here, thinking that, okay, we were going to drop. This is where I kind of got, I took a loss right here. SPY puts 388. SPY 388. Sorry, I can't speak. SPY 388 puts at 220 because it had a green candle here. I mean, a red candle here, and it broke out high a day, and it pulled back really, really, really fast. That's why I was thinking that, okay, we're going to dump right here. And it didn't end up just holding and just taking off. It just did not work out. And I think this was the day Yellen was speaking. So yeah, Yellen was testifying in front of Congress. So I think I ended up loading puts, just the fact of she was going to say something stupid. So and she didn't. It just I remember how much I hated trading when Yellen spoke, because she has got to be the worst double talker I've ever seen. She just never answers questions. She just walks around everything, and everything's like misleading. So I don't like it when she speaks, because when she was the Fed chair back years ago, the market always did that, just always popped and raged, and she was always dovish, and should have known that something was going to happen. But anyways, I liked it right here when it came back down to lower day and she was speaking. So I thought, to me, that was going to be a good play. Then it ended up just going against me. So then I should have taken calls right here, but I was just so worried about like her being Powell, that one word that she said, because it was related to because she's part of the Treasury, is going to be related to the banking industry. That one word negative about the banks would be would be the way to go. But so anyways, let's see. Then I took what puts at 11:53. I just didn't want to take any calls, like I said, because one wrong word from Yellen about the banking collapse. It's like trading with Jerome Powell testifying that one wrong word, it's just gonna get smashed. So I just sat it out. I mean, to me, it just wasn't worth it. And I just saw that someone said, why didn't you just trade calls? And that's why I didn't trade calls. You can go ahead and trade with the way you want, what you want to do. That's on to you. I'm not going to do what you want me to do because I don't do things like that. I'm taking what I like and what I'm doing. And if you don't like that I didn't take it, then you take it. I just, that's just not how I am. I'm not going to sit there and take calls when Powell or Yellen's speaking unless I strangle it because plus I wouldn't strangle over Yellen testifying anyways because I don't know if she's going to move the market. Powell, yes, but not her on the banking collapse. So anyways, I just didn't think it was worth the risk. So I just waited for her to stop talking or get to the end of the session. So, but I did take puts at 11:54, which was right here. Which candle was it? This one? No, right here. I took it right here. Not quite sure why I took it here at the 394 area. I think that there's something going on at maybe a higher time frame. 394 right here. I think it was where I saw it. 394. No, it's 392, 393. Yeah, it was right in here. This area right here where I saw some resistance, right around the 395 area. So I kind of jumped the gun and got it. When I went over 394, I got puts. I got the 39.40 puts at 12.50, and they went from 12.50 to $21 right there. Maybe there was RCT trend line up there. I don't think so. I think it was this 395 area, and I just got it prematurely. And I think I do now that I remember. I think I did get it prematurely, and I got a in the money puts so that if it did pop to 395, that I could average down more. So I did leave room. So yeah, they went from 12.50 to 21. Then I grabbed them again at 12.26, which is right here. When it came back up to the 394 area, I reloaded. I grabbed the 39.40 puts again at 12.30, and they went from 12.30 to 15.60 in that little drop right there. Then I just stayed out. And a good thing I didn't want to reload for a third time. It came back up here to the 394 for the third time because this is 1, this is 2, and this is 3. It's going to break, and it did break. I did grab more. Actually, I did grab it. No, I didn't grab this. I did grab the, if it broke out again. I think I did say in the room that if it broke out again, that I would grab it. Then it ended up raging more than I anticipated. I ended up grabbing the 39.50 puts at 12.53, which is right up here, right above the 395 level. I think I got it right around here. I think right over 395, but not the top. Right around in here. I'll just say they're around 395.20 or 395.30. And I got it puts at what 11.60. Then when it popped up higher to 396, that exaggerated move, I added more at 780, making my average 875. Then we got this drop right here, and then went from 875 to 1250. Then let's see. They got puts at 125. So rate 125 right here. Right here. Yeah, I got puts right here. So I got puts up here, average more, drop. I got the drop right there, sold, and it looks like I reloaded right in here. Reloaded right in here. I did. Right when it popped up, I reloaded. Okay, that's what I did. I do remember this too. I reloaded over towards above the 395 again. I got the 39.50 puts again at 850, and they went from 850 to 1120. So, yeah. So that was Thursday. Just getting a little annoyed that people like say, "Why didn't you take calls over here?" I didn't want to. I mean, because you almost testify. I don't like when people criticize my trading or look at it after the fact and said you should have done it. I don't like criticism. I don't like it whatsoever. So it really kind of pisses me off. You're trading in real time. You got to go with what your gut's telling me. And I was not taking calls with Yellen talking about the banking collapse. So we saw what happens when Powell testifies at Congress. Anytime he opened his mouth, something bad happened. The market dumped. I anticipated the same thing to possibly happen with her. It just didn't, and I just stayed out of it. I wasn't having no part of that, so I just waited for her to get out. So I just don't like. I responded to somebody on Twitter about asking me, criticizing me about that. I don't. That kind of shit pisses me off. So it's a good way to get yourself banned. But anyways, let's see. On the 18th. Let's see, what day is the 18th? Oh, sorry, the 18th. I posted Friday stats today. Today's the 18th. Oh, yesterday. Sorry, Saturday. I'm so confused right now. So yeah, Friday, first flawless day. I think all week, wasn't it? Yeah, loss. Yeah, I had a loss every day this week. Just seems like that. I used to have flawless days all the time, and now I've just been having one loss per day. Just has been getting me. So anyways, Friday SPY puts in a 391, which is right down in here. I just used this low right in here, the whole round number, pop back up, thinking okay, maybe we'll drop, but it didn't. Pop more. I waited out the first half an hour. I mean, you got the first 10-minute candle right here. If we took calls over higher day, it would have been a fake out. And if it went down here, it was a fake out. Then it came back up to higher day, it was a fake out. But I did grab this fake out though, because it faked out, dropped down, did a fake out. So we already had a double fake out, 1, 2, and it came back over here when it got over the 393.75 area. Well, 873, 393, 80 area. That's where I grabbed calls. I grabbed the 39.70 calls at 860, and they went from 860 to $10 right there. So ended up working out. Got a little bit of a move. That ended up being a fake out. Came back down, smashed down to lower day. Then I switched to puts. I took the 39.20 puts at 10.18 right here, right when it broke below the 33.92.35 area lower day. I took the 39.20 puts at 7.70, and they went from 7.70 to $15.50, so 100% move right there. Then I took puts again at 11.22, which is right here. I dropped down. You can see it gets below 390, gets bought, 390 bought, 390 bought, 390 bought. It popped up. I tried to make a run for it. I couldn't. Then it came back down, and when it got below the 390 level, that's where I grabbed puts. Thinking, okay, just because 390 is getting bought doesn't mean you can't have a knee-jerk reaction going below it and getting bought. So I'm just playing the knee-jerk reaction underneath it, and that's what I did. I took the 3,900 puts at 790, and they went from 790 to $13 right there. Then I played puts at 135 right here. No, right here. Right here. Oh yeah, right here. See what I did right here. Came back up to VWAP, rejected, tried to go through VWAP, got rejected, tried to go through VWAP, got rejected. When it came below these candles right here, 390.75, that's where I took the 39.15 puts at 860, and they went from 860 to 1680 right there. So that ended up being a good play right there. Then, I probably was looking at calls right here, but I was looking at this right now, just thinking, okay, got 4 good plays. First flawless day, I'm just going to stop. So I stopped. I didn't want to give back any end of the day stuff. Plus being quad witching, and quad witching just used to be such a massive mover. I mean, you could just SPY would just dump or rage $3 or $4 in the last 20 minutes. And just the last, I don't even know when the last time it had a huge move. It's kind of been a couple years, but they've just been pinning it. It's been non-eventful. People get so excited for quad witching, and I used to, but it just has not been a mover in a long time. And I was thinking, okay, because it hasn't moved in a long time, maybe this time will be different, because I always like to keep an open mind. I always like to think of the hot hand fallacy scenario, that the more you win, you're due to have a loss, and the more you lose, you're due to have a win. And because there's just been so many times that quad witching has not been a mover in such a long time, that we are due to have a major move. So I was thinking, okay, maybe this will be the day. And I think that max pain was $3.99 if I remember correctly, and we're down at right around the 391 area. I was like, okay, I don't think we'll get to 399, but wouldn't it be something if SPY would just shoot up to 394, 395, or even try to go green at 396 and fill the gap? That would have been kind of cool, but we just didn't get to move. It was another pin. So maybe the next quad witching will be the one. The more it delays having a huge run, the more I think that it's going to end up happening, because it's been a long time. I don't remember, to be honest. Must be at least a couple years. I don't know. But anyways, that's going to do it for the recap. Hope this has helped, and thanks for watching.